Hey everyone, welcome back to Corporate Decoder. Today we're diving into a report from Amarin Corporation, a company that's been making waves in the pharmaceutical world. It's a bit like watching a medical drama, but with spreadsheets instead of stethoscopes. This report might seem like just another piece of corporate paperwork, but hidden inside is a story of a company facing changes. We'll be looking at why a board member decided to step down and what it might mean for the company's future. This report is called an 8K, which is basically a quick update companies give to investors about important events. The key date to keep in mind here is March 28, 2025, because that's when this event was officially reported. Here's the main event marked Apollo. A member of Amarin's board of directors decided not to run for re-election at the next shareholder meeting in May 2025, so he's leaving the board. The report makes it clear that DePaulo's departure isn't because he had a fight with the company or disagreed about how things were being run. This is important because sometimes when board members leave, it's a sign of trouble behind the scenes. In this case, it sounds like a personal decision. So what does this all mean? Well, when a board member leaves, it can signal a shift in strategy or direction for a company. Even though the company states there was no disagreement, the impact of this change might still be felt, although it might be subtle. A new board member might bring different ideas or expertise which could influence future decisions. It's like a sports team getting a new player, the team dynamic changes a bit. Now let's step back and look at the bigger picture. Amarin Corporation is a pharmaceutical company. They're in the business of developing and selling drugs with a focus on heart health. Their main product is called Vascepa, a prescription medication used to lower triglycerides are a type of fat in your blood, and high levels can increase the risk of heart disease. Amarin has faced its fair share of challenges. One of the biggest was dealing with generic versions of Vascepa in the market. When a drug loses its patent protection, other companies can make cheaper versions, which can eat into the original drug maker's sales. This is a common issue in the pharmaceutical industry, and companies have to constantly innovate to stay ahead. So how is Amarin doing financially? Unfortunately, this particular 8K report doesn't give us detailed financial numbers. It's more focused on the change in the board of directors. To get a sense of their financial health, we'd need to look at their quarterly or annual reports like the 10Q or 10K filings. Those reports break down their revenue, expenses, profits, and other key financial metrics. Without those numbers, it's hard to give a complete picture of Amarin's current situation. However, we can make some educated guesses based on the industry and the challenges they've faced. The generic competition for Vascepa has likely put pressure on their revenue, so they're probably working hard to find new products or markets to grow their business. Overall, Amarin appears to be in a period of transition. Losing a board member can be a bit unsettling, but it also opens the door for new perspectives and ideas. The company's success will depend on how well they navigate the challenges in their market and how effectively they innovate and adapt to the changing landscape. Amarin is at a point where it needs to make some important decisions. The company has to keep pushing forward, even with challenges from other companies. Whether it can do that is the main question for its future. We can keep an eye on it. Thanks for watching. If you found this helpful, please like, comment, and subscribe for more deep dives into the world of corporate filings.